Hey everyone, welcome back to Finance with Shant. It's been quite some time that I've done a video, so I wanted to start a backtesting series video with a specific focus on long term investing and something that is done through perseverance and discipline. So, these are some of the focus areas that I wanted to particularly concentrate and create content about. So, I'll be creating a set of backtesting videos on a Momentify platform based on their sample strategies. We will then explore how they perform against Nifty 50 as a benchmark, how much alpha each of these strategy generates, and look at how long-term investing can benefit an individual's portfolio. Again, these are not buy and sell recommendations. These are rather insights into how a portfolio works through different market cycles, be it a bear cycle, be it a bull phase. We want to understand how each of these market phases affect our portfolio to have an objective view and to then arrive at a judgment. That's the whole agenda. All right,
Let's
so
start.
what you observe here is the Momentify platform. This is a momentum based investing platform that has been created by the Define Edge team. So you'll have to have a Define Edge account, demat account per se, to be able to use this. So this is the platform that we'll be using, and here are some sample strategies that we will test individually over the course of the last 10 years. So we want to have one of the major bear phases to be covered, which is the pandemic crash, to try and then see how these strategies performed during that bear cycle, and post that bear cycle how it um, transitioned into the bull phase. So we want to understand that. We want to see how these strategies perform during those phases. What is the maximum drawdown that the historical data suggests for this particular strategies, and if there are any tweakable opportunities available. So these are some of the aspects that we'll be looking into. So essentially what I'll be doing is I'll be giving you a quick explainer into what some of the parameters are within the strategy. Once that is done, I will start the backtesting. This will be a simulator kind of a backtesting where it will simulate each month's performance, and you'll be able to see the realized, unrealized, and total PNL along with the maximum drawdown. All right. All right, so here is the first strategy that we'll be exploring today. This is called the MI strategy, MIP12. Let us look at the parameters that this particular strategy governs. Okay, so the first block that you see here is the strategy type. You can choose if the strategy should be a real strategy, that means tradable with real money, or if you want it to be a virtual strategy, you can choose accordingly. This will be your strategy name, it could be anything. This is for ETF specific things, which is not needed for us. So the exchange group that this particular strategy will work on is the Nifty 500 index, which is the top 500 stocks. There are three types of investment methods, which is lump sum with SIP, and SIP only. So if you select lump sum with SIP, you have a dedicated SIP amount that you can choose to then increase your overall monthly inflow. If it's only SIP, then you can choose the SIP amount and there will be no lump sum option. So for this exercise, we will choose a lump sum option. I will choose a relatively small capital of 5 lakhs as allocation here. So our focus will be on the top 20 stocks, and the ranking criteria is OLR. There are specific ranking criterias. There is return percent, that is you're sorting the top stocks based on their overall percentage returns in X period. Then there is VOLR, volatility adjusted returns. That is again another metric through which stocks with better performance and better volatility is chosen. Then there is Sharpe return and RSI. These are some of the ranking criteria. Then there is exit rank. That simply means if a stock goes out of the top 40 spots, then we exit. If not, we still hold that particular stock, irrespective of it being a bull or a bear cycle. Then the frequency of rebalance, this is monthly. That means every first of the month we look at our portfolio and then we rebalance it. These are some of the strategy level details. That is the period in days. This is the lookup period. So we'll have a 252 days lookup period when evaluating all of these parameters. So the retracement that we want, this is stock specific. That means we want the stock to be within 50% retracement of its 52-week high. 52-week high means in the last 1 year, from the topmost point, we want the stock to be within 50% range. Okay. For example, if my stock is at 10,000, then 50% of that would be 5,000. So I want it to be within this range of 5,000 and 10,000. So that is this. Then none of this has been added here. So the chart type will be OHLC, meaning candlesticks, open, high, low, close. The time frame will be daily. We have also added a moving average exponential um, filter here. That simply means if a stock is below 200-day moving average, right, exponential moving average, those will be excluded. Only those that are above their 200-day moving average will be included, because 200-day moving average shows a long-term bullishness of a stock. So we want to try and filter out those stocks that are below their 200-day moving average. Then we have relative strength. Relative strength is an interesting concept. If you don't know, I'd recommend reading through some of the books on relative strength from Prashant Sasar. It is highly engaging, and it's a must read. So what we're essentially trying to do is we're trying to compare each of these stocks that are going to be selected as part of the portfolio, and then compare its strength relative to Nifty 500 as an index, and we will ensure that we take only those stocks that are above 200 EMA on a ratio chart. Okay, this simply means I am picking out those stocks that are stronger relative to the Nifty 500 index that come as part of the overall portfolio. Okay, so these are the only parameters. We have one more thing, which is market trend filter, which is an interesting thing. So market trend filter simply means that because we have a lot of volatility, in events of volatility, we want to ensure that our frequency of buying and selling is controlled, our drawdown is controlled. So we have this market trend filter. So this market trend filter, there are three types for this. So exit as per strategy, no new entry. Keep stocks, no new entry. Exit all stocks in a basket, no new entry. Exit as per strategy, the strategy is that if the top 20 stocks goes to a position that is greater than 40, then it is exited. There will be no new entry. Keep stocks, that means will not exit anything, will not even buy new ones. Exit all stocks in basket, no new entry, will close all the positions, then will not take any new entry. When would this happen? We have specific index level filters. For example, the filter that is available here is Nifty 500. If Nifty 500 goes below its 20-day moving average on the date of rebalance, if this condition is met, then this filter will get activated. So based on what we have chosen, the action will be taken. For now, exit as per strategy will be chosen without any changes. Okay, so we will save this. For example, sample MIP 12. Okay, and if we save on this, then this is the page where we have the confirmation. We read through this and we'll click confirm. All right, so now it is time to backtest this. So we're going to use our zone platform to backtest each of these sample strategies. So within our zone is a premium version. So to backtest, you'll need to have a premium paid plan. Um, so if you come, you have specific backtesting available here. So I've saved something in my favorites, which is momentum investing scanner. This is where you'll be able to backtest the strategy that we just discussed. So here, because the strategy is already saved there, so I'll come here. So I'll choose the MI strategy MIP12 sample. Okay, this is a sample strategy. If you see, all of those parameters have already been added here. Okay, so now I have to click on this simulator. The capital remains 5 lakhs. We will choose 2015 to be the start date. Okay, so why 2015? um, because it covers major cycles. There is a bull phase, then there is a bear phase, and then again a bull phase. Then we are currently going through uh, a bear and a consolidation phase. So all of these parameters get accounted for, and you will be able to see how each of these um, strategies perform there. I want you to specifically focus on specific timelines such as the COVID crash, so that you try and understand how the portfolio works, what is the drawdown during those phases and all. Okay, so we have given all of the parameters, so the rebalance rate will be 1. So let us start. Yeah, one more thing, there is allocation type, right? This is reinvestment. So there are three things: fixed, reinvestment, and SIP. So fixed meaning irrespective of there being a profit or a loss, profit will get booked, and loss you'll have to compensate from your own pocket. Reinvestment is all of the harvested profit is reinvested into the portfolio so that the portfolio keeps growing. SIP, as you already know, is month over month SIP that you do. Okay, so this will be reinvestment. And now let us simulate. So I'll choose auto simulate. Yeah, if you see now, this section is the unrealized PL. This is the realized PL. This is the total PL, and this is the maximum drawdown. Running stocks will be the stocks which will be in your portfolio. So based on this date, we've got these top 20 stocks. So it will also show here added stocks. And every month on the first, we will go ahead and rebalance this. So if you see on the 1st of May, these two stocks, they went out of the top 40 spots. So they were removed. Okay, this is the loss that we booked. And if you see here, the realized PNL is 4.5% already. So that is our maximum drawdown at this point. Let us try and see how this performs over a period of 10 years. One important thing that I want to let you all know, that with momentum based strategies, the outperformance is visible during bull phases and Underperformance is visible during bear phases, so you can expect some drawdown, specifically because this is equity focused and you are working with a diverse set of stocks from large cap, mid cap, and small cap. So if you see, within a year we have experienced already 13.42% of maximum drawdown, and we haven't realized um, any profit so far. So we've realized almost 16.86% of loss. So that is where the strategy is. Let us see how this performs. Okay. So the unrealized PL, it's going up now. Let us see how it turns out. So if you see, we are already in 1.5 year into managing our portfolio and into this strategy. One thing you need to know with long-term investing is that you won't get anything short-term, right? Because there are market cycles in play and specific strategies outperform in specific market cycles. Only those with patience and discipline is rewarded. I just wanted to put it out. All right. So we see a total PNL of 15.5% now in 2017. That's almost 2 years from where we started. And if you see now, if you observe now, when the market conditions are right, look at how momentum based stocks outperform. If you see, stocks that are getting exited are shown here, and the rebalance being the reason. That means on the rebalance state, they moved to either spot 41 or below within the top 500 stocks. only those get exited and they get replaced with the new stocks that are within the top 20. So you're already running 46%. Okay. So with how this portfolio is performing, we clearly know that this is a bullish phase, right? We see good amount of returns on top performing stocks, and our overall portfolio's P&L is going high. Please know that again, this is not a buy and sell recommendation. We just want to introduce you to the power of momentum investing and want to stress upon this aspect that when you choose discipline and have a system based trading or investing in long term, there is a possibility that it will give very good returns. Not this strategy, maybe any strategy, but through discipline and through a system. Okay. Hmm. Okay. So we're almost what 3.5 years into the strategy now. So we've already realized around 52% of our initial capital, which was 5 lakhs, unrealized is trending somewhere around 6.5%. I think now in the few months we'll be heading into the COVID market crash. Maybe in the first quarter of 2020. So I want you guys to focus on how this particular phase affects the portfolio and what not to do by observing how the markets perform once that phase is over. Okay. I think it was somewhere around Feb or March, right? When we observed the crash. Yeah. Yeah, if you see, a lot of stocks just got exited and you have booked all of those losses there. Because the system is available, if you observe, our portfolio is still outperforming and our drawdown is also controlled, right? Um, in the moment decision in such market phases can be fatal for specifically to your finances, right? So in the moment decisions should be avoided, and we should rather have objective decisions that are clearly written. If you see, the portfolio is already outperforming. The the COVID crash was not even much of a shock for the portfolio because of the system and the disciplined method of investing. So what these numbers are indicating is that in over 6 years now, our portfolio through those cycles has been able to generate close to 250% of returns. Now it's 300. So that's great. It's a great number. See, this is a clear bull face with just one or two stocks trading in red. If you find this video lengthy, I mean, imagine the journey, right? Because to even arrive at this, you'll have to spend somewhere around 7 years. That is why I quoted that patience is rewarded. So, I think we are somewhere around 8 years into this backtesting now. Be another 2 3 years left. The portfolio shows good performance in terms of the total PNL. And if you observe, the max drawdown is still controlled. That means at any given point of time, your portfolio was down maximum at 18%. So that's what that indicates. So this is good. Okay, now we're in July of 2023. Um, I'm able to recall one thing. I mean, it, there are two ways, right? Either you can work for the money or the money can work for you. Investing is one of those aspects where the money work for you. So the larger the money, um, the better it is because that takes off the effort of you being have to work. So yeah, I mean in February 2024 now we're already 800% in profit from our initial capital of 5 lakhs, which is great for roughly around 9 years. That's 8 times 5 lakhs, which is good with again controlled drawdown. Okay, so just want to take you guys back in time, the first 2 to 3 years, right? When we started back testing this between 2015 and 18, we observed negatives in the portfolio. A lot of times, what happen is that because we don't have a system in place, because we have in the moment decisions, and because we're not disciplined enough, we keep changing the systems, and we don't let the system run on its own, and that results in us booking losses in each of the systems, and that becomes a pattern, right? So if you compare that phase to the phase, it's the same system, the same strategy, the same portfolio, but different outcomes. So it's important to have patience during the bear phases and to stick to your system, stick to the objective based decision making. Okay, I think now we're at the end of 2024, we've already touched 1000% in terms of the overall return. So our capital has grown by 10x. We observed some drawdown in February and March as well. So if you observe here, you were trending somewhere around 51 or 52 lakhs. Now it's 40 lakhs, simply meaning in those 2 months from your portfolio, you lost somewhere around 10 lakhs. Okay. Even when that happens, it's important to stick to your plan. If your plan says exit, exit only then. If your plan doesn't say exit, you don't take an in the moment decision and exit. Because a loss has a greater effect on amygdala, the center in our brain, and we process pain 2x of what it is. So it's almost like we have a physical pain when we see a loss on the screen. So it's important to understand how our mind works in those situations, because our mind was never built to be in this situation. It was built to hunt, it was built to be outside, but our amygdala is still responding and arriving at a fight or flight response whenever we look at a loss. So it's important to regulate it. Again, you may not be able to stop it, but you will at least know when it is kicking in. Yeah, and again, this video was not meant to hook you onto anything. This was intended at showing how each of the market cycle affects your portfolio, when to stay strong, when to exit. Yeah. All right. So we have, I think, finished the backtesting. So this is where we started on 21/3/2015, and from there, this is how our portfolio has grown. During this period, Nifty 50, if you had invested in a Nifty ETF or Nifty 50, it would have given a 9.5% CAGR, whereas the compounded growth of this particular strategy is 22%, wherein your overall PNL is roughly close to 800%. So that means your investment was 5 lakhs, you're already trending somewhere around 40 lakhs with a maximum drawdown of 18%. So if you see here, these are the total number of trades that you took. The average monthly churn simply means how many stocks on an average were exited each month. This is the number of positive trades that you had. This is the number of average annual return. So on an average, you had somewhere around 24 to 25% returns. This is the median return, and this is the positive years and the positive months. Monthly wise, this is the average monthly return. This is the Sortino ratio. This is good Sortino ratio. Sharpe is also good. Average positive year return, you have this. This is the average negative year return. Even on a negative return, the average is only 8%. So this is on a yearly basis, and you also have an option to export this data. Okay, so this was our backtesting video. Again, just a disclaimer, I'm not a financial advisor, and this is not a buy and sell recommendation. I'm not even recommending this strategy. All right, there could be hundreds of strategies. You'll have to look at a strategy that fits your risk appetite and your financial goals. The intent behind this video, I just want to reiterate, is that I want you guys to know that each of the portfolio goes through different market cycles, and because it goes through different market cycles, there will definitely be drawdowns, and during drawdowns there is specific aspects within your brain that starts kicking in, and you make in the moments decision that have a fatal impact on your finances. So the agenda of this is to show you that in the long term, with a disciplined approach and with an objective based investing that is backed by a system, you can still make good returns without having to deal with all of those in the moment errors. Okay, so that's the whole purpose. And if you're still watching, thank you so much for your time. I hope this um, video was meaningful. Um, as a prerequisite, if you want to access this particular platform, as I said earlier at the start of the video, you'll have to have a demat account from Definage, and then go to Momentify, which is one of their offerings, and from there you'll have to explore the strategies and build something of your own, backtest it, and then trade or invest that particular system through discipline. Thank you.